So, how are you today? My name is Steve Campbell, president of Cornerstone Wealth Advisor Group in Fishersville, Virginia. So, it is at the end, almost at the very end of February when we are taping this. And what is interesting is the market has just really taken on some volatility. Um, to be to be accurate, I at the beginning of the year said I don't know if the markets will be up this year. I think the markets will be up by the end of the year, but I did say that we would have several 5% pullbacks, at least one or two 10% pullbacks, and maybe even a 20% pullback. And we are not even close to that territory yet, but the market is really been volatile, and especially in the NASDAQ and especially in the Magnificent Seven. And today, as I speak, yesterday NVIDIA came out with their quarterly financial results. They literally blew the number out of the water. So when we talk about year over year sales and profits, most companies would just give their firstborn child for 5 to 7% annual growth of revenue and profits. So Nvidia's yesterday, their year over year sales up 79.7%. Their profits they're very profitable. And yet today the stock dropped $10 a share. I think they were down somewhere in the area of 4 or 5%. And it's beyond me. And in up markets, it does seem that the markets shrug off bad news. And we are in a market now where great news is totally ignored. I think some of that is because of all of the uncertainties of the tariffs and potentially, the effect that it could have on inflation. I know President Trump is hoping to bring down inflation with a combination of lower energy prices, which would then translate into lower inflation in food cost and building materials and things like that. And they are hoping that we will see interest rates fall this year. But I will tell you, as I have said weekly on our radio show, by the way, on WSVA 92.1 FM and 550 AM, Saturday mornings from 7 to 8 a.m., I talk about on an ongoing basis, the markets absolutely hate uncertainty. Give me good news, give me bad news, but I don't want to be out there where I really don't know what's going to happen. And that's where we're at, frankly. It's amazing to me. And I think that if you're a long-term investor and you believe that AI is going to continue to play a big part in commerce in the United States and worldwide, today was a great buying opportunity for NVIDIA. Now, if you own the S&P 500, if you own a typical growth mutual fund or ETF, NVIDIA is probably your largest holding. If it's not, it's number 2 behind Apple. They are the 2 largest corporate enterprises in the world. And so what should investors do with all this uncertainty and volatility? It's been a while since I've said this, and my buddy Tyler Wines does my taping. He is in his early 30s, I do believe, and I would tell Tyler this day and every day, 100% in the stock market. Don't think about it. Don't worry about it. Just put your money in and let it go. Now, I would also say that if Tyler were in his 40s and his early 50s, I would say be 100% invested in the market and don't worry about it. Now, if I'm 5 years away from retirement, I want to own some bonds as we get close to retirement. Within a year or two of retirement, there's no question. And at that point in time, I would want to own likely a third of my money in bonds for income that will last me the first 7 to 10 years of my retirement. We use a bucket strategy, so our second bucket would be a kind of a 60-40 fund with some gold in the portfolio. And then our third bucket for money in retirement that I don't need for 20 years, I want to be in the stock market again with all of that third bucket. So I do believe that we will see volatility this year. And I would just say this, volatility is the price you pay for superior performance. If you are going to be in stocks, if you just think about this, inflation, the goal of the Federal Reserve is to keep inflation at 2%. There are some academics right now that are saying it's just impossible, that maybe we are going to have to live with 3% inflation. But if you have inflation at 2% and bonds only make 3 or 4%, you're barely staying ahead of inflation. And if you are in a 60-40 fund, you hopefully can make 6 to 8%. But if you're in the stock market and you look at the S&P 500, over the last 100 years, the S&P 500 has returned 10%. So I would guess, think about it this way. If you're in bonds at 3%, it takes 24 years for your money to double. If you're in a balanced mutual fund and you are getting 6 to 8% return, let's split the difference and say, okay, a balanced 60-40 fund will make 7%. Your money will double every 10 years. And if you're in the stock market and you can get that historical 10% return, your money's going to double every 7 years. And so you don't have to be real sharp in math to realize you're going to make more money in stocks than you will in a 60-40 fund or in a bond fund making 3 or 4%. But the price you pay for that is the occasional volatility. And I think that 2025 will be the year of volatility. So with that, hope you're, I am sick and tired, by the way, of winter. And I hope you're enjoying these days of 60-degree weather. Spring is coming, and so may God bless you in all you do. And if you would like to talk to Andrew Kester, Jeff Airy, or myself, feel free to give us a call at 540-942-1703 and tune in to Your Money Matters today on WSVA 550 AM, 92.1 FM. Our show airs every Saturday morning from 7 a.m. to 8 a.m. Or you can check us out on our website, csw.org, and where you can find all of our past shows on our website. So, hope you have a great day.
Content in this material is for general information only and not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. The opinions expressed in this material do not necessarily reflect the views of LPL Financial.